YouTube. Okay, so once again, you guys are welcome to this free trading this evening. Today is the last day of November 2025, and today we're going to be talking about understanding where and when to buy. All right, so this was our good morning trading show that we had on Friday, and we had two places we intend to buy. The first place was here, all right, and the second place was here. You see it? So if we check what the price is actually done or what price has done, you will see whether we had a good trade or not, or we are just bluffing, right? So look at it. You see, price actually respected our forecast and our zones, right? So this is where we are. Okay. So like I said, I like price to come to the lower parts of the demand areas. All right. I like price to come to the lower part of the demand areas. Okay. So when we get started, you will get into you will get to see you will get to see our entries. Okay. Great. So the question remains, when and where should we buy? When and where should we sell? So what I'm going to do is I'm going to do a quick rundown of the month of November, and we are going to see if we have been able to be profitable or not. Okay. So let me look at November. November beginning, it's going to be from November 3rd. Do I have November 3rd? Okay. Yes, I have November 3rd right here with me. Okay. Great. Great. I have November 3rd right here with me. All right. So let's see the November 3rd on 30 minutes. So now, before we go into all this, the first thing is, where do you want to buy? Where do you want to sell? I have a checklist. And if you don't have a checklist, I'm telling you, because of the nature of the market does not have a rule of its own. It's not like stock market that closes at a certain time. The only time the forex market closes is when every broker on earth closes. And that is Friday, 10 p.m. or 11 p.m. And at the same time, that is they will open on they'll open on what do you call it? Sunday 10 p.m. Okay? So when that happens, that's when you'll be able to place your trades. But if market does not close, you are having a 24-hour window. Okay? You're having a 24-hour window. And if you have a 24-hour window, nobody tells you when to buy, nobody tells you when to sell, nobody tells you what to do, how much to put in, how much not to put in. Nobody tells you all that. Okay? Great. So, if you don't have a rule, nobody's going to tell you what to do. Your money will simply be in the market and it will go to somebody else. We must understand that trading is a zero-sum game, all right? Trading is what we call a zero-sum game. What does it mean by a zero-sum game? The money you are making is another man's loss, and your loss is another man's profit. Your loss is not the broker's profit. No, no. If you are buying, remember it is someone that is selling to you. And if you are selling, someone is buying from you. Okay? So if you think the price of a thing will go up and you want to buy it, somebody that is selling to you believes that the price is going to go down. That's why he's selling. And if you believe the price is going to go down and you are selling, the person that is buying at what you think is a high price is that person's low price because he believes that the price is going to what? Is going to go down. Do we understand? Great. So trading is a zero sum game. All right. So guys, let me play the music. Just give me 5 minutes. Just give me 5 minutes, please. I need to just quickly sort something. Just a little minute, please. All right. So if you don't have a trade checklist, you are going to become a prey in the market. And now, what does the trade checklist do for me? What the trade checklist does, it tells me when I'm going to buy or sell, or where I'm going to buy or sell. Okay, so I'm going to share my trade checklist with you, all right? And I promise you that this is what we do. This is the tip of the iceberg of what we do every morning. Okay, this is what we do every morning. Um, 8 to 9 a.m. Monday to Friday, all right, at the Good Morning Trading Show. Okay, so the first thing that we check, apart from the economics, is trend and level. So those are the two things, the when and the where. All right. So now, this is how market moves, guys. This is how market moves. Simple. This is how market moves. Market has three directions. The first direction that we have is an uptrend. The second direction that we have is downtrend. The third direction that we have is what? Is a sideways trend. Okay? These are the three directions that we have. I know you have seen this a lot. If you are not new to FX, if you are not new to trading, you would have seen this many times. Okay? So, I'm not going to be boring you with much, but some of you are actually new to trading. So you must understand what is a trend. A trend is when market is moving in a particular direction that does not need analysis. I'll take that again. A trend is when market is moving in a particular direction that requires no analysis. For example, everybody, I want you to drop in the chat box, is this market going up or this market is going down? Please let me know. Drop in the chat box. What you see on my screen, this is black and white now. Sometimes the white goes up, sometimes the black comes down, but generally, without doing any analysis, is this market going up or this market is coming down? I need plenty answers. Plenty answers. Abdul Mumini Adetayo, you're welcome. Down. Amechi says down. Is it falling or it's rising? Is it falling or it's rising? Angel Gabriel, that's how you appear like an angel. Appear today, appear tomorrow, disappear today, disappear tomorrow. You're welcome. Great to have you in our midst. Okay, so everybody believes that this particular market is going down. That is a downtrend. Don't stress yourself about it. There are many tools you can use to find out if the market is going down or not. But basically, your eye is your greatest tool. If you can see that the market is going down, then the market is actually going down. Take it or leave it. Do you understand? If you can see that the market is going down, then the market is actually going down. Okay? Now, look at this one. Let's see something here. This is the market going down. Where is the market going? What's the direction for this one? What's the direction for what you can see on the screen? Is the market going up or the market is going down? Okay, Amici says the market is going up. Who else has another opinion? What do you think the market is doing here? What do you think the market is doing? Do you think the market is going up or the market is going down? It's up. Okay, great. Now, let me now bring something to our attention. Here now, what is the market doing here? Is the market going up, or the market is coming down, or the market is just dancing around? What do you think the market is doing? Amechi, can you give us an answer? What do you think the market is doing here? Dancing around, going up, going down, sideways. Okay, great. These are the sideways. Abdulmumin says sideways. Great. Now, these are the three movements of the market. The first one is when the market is going up. The second one is when the market is coming down. The third one is when the market is moving sideways. And we can actually trade on the three of them. Now, you may have heard that you should avoid sideways market, but market does not trend all the time. So because of that, you will want to take advantage of all the trends. Okay, great. So now let us analyze, or let's talk about when. So here is it. Market is going up. If market is going up, you will see this. Market definitely moves up and down. Up and down. See, market moves up, then it will come down. It will go up again, then it will come down. It will go up again, then it will come down. Why then do we call it an uptrend if it goes both ways, up, down, up, down, up, down? The reason why we call it an uptrend is because the amount, the size of the movement up is bigger than the size of the movement down. Please understand this. The size of the movement up is bigger than the size of the movement down. He said the movement up is longer than the movement down. Very simple. So when market now begins to have a longer down movement and a shorter upward movement, then we would have what? A downtrend. Very simple. When market now has a longer movement to the downside and a shorter movement to the upside, then we are known to have a downtrend. Do you understand? Market moves in waves. Market don't just go in lines, downtrend like this or uptrend like that. No, market doesn't move like this. No, it moves in waves. And wave moves up and down, up and down, up and down. So when the up move is longer than the down move, then we classify that as an uptrend. When the down move is longer than the up move, we classify that as a downtrend. But when both the up move and the down move, they are not defined. They are not defined. Okay, then we will say that this guy is in a sideways market. If you want to buy here, you have this guy come down. You want to sell here because there was a break of structure, whatever, you have this guy going up. So when market is not defined, it becomes what? A sideways market. So now, in an uptrend, there are places that you will look forward to buying. So now, if we are going up, what we are looking forward to doing 100% of the time is to buy. And if we are coming down, what we are looking forward to do 100% of the time is to sell. If we are in a sideways market, okay, if we're in a sideways market, you can do both 50-50. All right. In a downward market, you are looking for 100% sell. In an upward market, you're looking for 100% buy. But in a sideways market, you're looking for 50-50. It's 50-50. Please understand the nuances of these markets. This is going to revolutionize the way you trade. All right. Now, if we are looking for only buys, now where, like the topic of our classes this evening, where do we now look for the buy? If we are in an uptrend, and an uptrend is characterized by what we call a high, a low, a higher low, and a higher high. Sorry. Is a low that starts first. A low, a high. Yep. A higher low and a higher high. This is an uptrend. But for a downtrend, we are going to start with a high, then a low, then a lower high, and a lower low. This is a downtrend. So, an uptrend will always begin with a low. That is like this. It starts from a low, then gives you a high, then you have a higher low, then higher high, higher low, then higher high. All right, higher low, then higher high. But a downtrend starts from a high, then a low, goes back to a lower high, then lower low, lower high, then lower low. And it continues like that. If it's going to change again to an uptrend, it will start from this low, then a high, then a higher low, and a higher high. This cycle continues for the entire market structure. This cycle continues the whole time. You can find this cycle on 1 minute and you can find it on 1 month. You can find it on 3 minutes, you can find it on 3 months. You can find it anywhere. It's what we call the fractal nature of the market. Okay? So, if we understand that this is the attribute of an uptrend or the attribute of a downtrend, you notice that we didn't speak about the sideways market because the sideways market is 50-50. You are either looking for buy or you're looking for sell. But I'm focusing on the uptrend and on the downtrend because we are looking for one thing. However, when you graduate and you move towards the advanced classes, you will know that there are other things that you can do. But for now, when the market is in an uptrend forming a higher low and higher high, you are looking for 100% buy. Not that you will win 100% of the time when you buy, no. But all your attention is to buy. When you are in a downtrend, all your attention is to sell. So you're looking for 100% sell. Okay? You're looking for 100% sell. Let's proceed. So, if we are in an uptrend, let me begin with that. We have a low, we have a high, we have a higher low, we have a higher high. Please listen. Until there is a break of structure to the upside, until the high is broken, there is no uptrend yet. So when the high is broken, then we cannot be thinking of an uptrend. Okay? Then you can even also add the first low, the second low, and add a trend line. But we're not talking about that today. So now, if market has broken this low, sorry, the high, where, like the topic says, where are we going to come into the market to trade? If market is in an uptrend and it has broken the high, there are only, let me not say only, yes, there are two major places that you should look forward to buying. I will clarify it today. Two major places that you should look forward to buying. Two major places. The first place is this. That particular high that was taken out that made it an uptrend, on that particular high, draw a line or a box. Okay? Draw a box on that particular place. The second place is this. The foundation of that particular move that broke these highs. The foundation of that particular move that broke the highs. This is the foundation. Draw another box there, or a rectangle, and extend it into the future. These are the two places that you are expecting a buy. I'm going to write them down. Place number one, category place number one is where the previous high. Category place number two is the origin of the move. So, the origin of the move that broke the high, that's the category number two. Please follow me. You remember that we said market does not move in straight lines. Sometimes we may have this. They will have this. So, sir, look at it. There are many lows here, many. Don't worry. That's why I'm giving them a categorization. Not just two places, but two categories where we would look for a what? A bar. But this is the simplest form in its basic form. And if you can understand the basic form, you can understand anything around it. We know that A to Z is the foundation of English. Therefore, even a professor is only combining A to Z together. Any English word you do not know today is between A to Z. Simple. 1 plus 1, 2 plus 2, 2 times 2 is numbers. Mathematics and professor of maths, it's all numbers. And we say numbers don't lie. Okay? Good. If you understand this, most of your losses will be reduced. So when market now comes back into this place, we now look for a buy. This is the where to buy. Market can break it and go down. This is another where to buy. It's just like you're looking for fuel. If you are traveling and you thought one NMPC is opened and you are looking for fuel there, and it happens that as you got there, they are closed, you look for the other one. But the most important thing is that your fuel does not finish before you get to where you're looking for fuel. That's where risk management comes in. You don't exhaust all your money on a particular category setup. before you get to other places where the market is now likely going to take off. So these are the two basic places. Now, let me explain the complex part to you. If we are in an uptrend here, we have a low, we have a high, we have a low, we have a high like this. All right. Then we now have this. So where am I going to buy if market is now coming back down? All right. So now here is the thing. First category place, guys, don't forget. First category place is what? The previous high. Market is not straightforward. Market is simple, but it's not straightforward. This is why you cannot make money, or you cannot even be successful at all if you're looking for a straightforward way. No. If you're looking for 30 minutes 30 minutes mastery to order block, kinika this to liquidity, this one to kinika, this one 98%, it will never work. Never. It will never work. Why? Because a YouTube channel is a channel of learning whereby so many videos are uploaded. And if you don't devote yourself to watching or chewing the entire video, you will not understand what the person is teaching. So for example, I teach and I trade almost every day. I don't trade every day, but I call out trades every day and I teach every day. There are people here who have made money from that session. So I now post one video how you can understand liquidity in 30 minutes, and somebody believes that with this one now, I don't become lot of liquidity. It's not going to work out like that, because every day I'm looking at the same thing. If you don't join me every day, you won't see what I'm doing. You won't see where the market is not as straightforward as this one. Okay, so let's go on. The first place is what is the previous highs. How many highs do you have here? Now we have this high 1, we have this high 2, we have this high 3, and we have this high 4. Okay, you are only going to pick a high that will not interrupt the next one. Who caught that? Don't mind the way I'm speaking. I'm speaking deliberately slow, because if you go on YouTube now, on most courses, on my blast and our machine, the people they take talk. Because they said the attention span of human being is going down. But people are not making money. So that's why I'm taking it slow. May that they understand them. All right. Now we have 4 highs here. 1, 2, 3, 4. But the highs you are going to pick are the highs that are not being obstructed. Highs that are not being obstructed 2 times. Let me be very clear. The highs you will pick is the high that will be obstructed only once, not twice. I'm not doing support that has multiple touches. That's not what I am saying. That's a different strategy, whereby you can have they will tell you that this is a major support area. Why? Because it has multiple touches. That's not what I'm saying. No. What I'm talking about is, in an uptrend, we need a decisive place where market has a higher probability of reversing from. And you have the first category of place. It's called the previous highs. The previous high here, there are 4. But the ones you will pick is the one that will only be obstructed once. How do I mean? If you pick this high, as I've explained here, draw it to your left. It has been obstructed by this guy once. That's all. Draw your rectangle. This is the only one that is allowed. Okay? If you draw this guy, it is also what? Obstructed once. That's all. You don't need any obstruction again. But if you want to draw this one, it's obstructed once, 2, 3. You don't need this guy. Take it out. Are you following? If you want to draw this guy, you are also going to have obstructions here, 1, 2, and 3. No, 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 no. We don't need that. So this leaves us with only 2 highs. Only 2 highs. Let me draw this up so that we can have space. Leaves us with only 2 highs. So let me draw it cleanly. Let me make it very clear. Oh, nice. Good. So we have this and we have this. Whether it's close together or it's not close together, that's not your own problem for now. These two falls under the first category of highs. Then the second one is the origin of the move, which is the lows. Let me put it this way so that you don't find it confusing. Let me not say the origin of the move. Let me say the immediate low. The immediate lows. Good. Immediate lows, right? So now, what are the lows that you have here? These lows must not have the obstruction. It's only the highs that can have one obstruction. In fact, it's a must. The highs must have an obstruction. The lows must not have the obstruction. So we are going to use another color for the lows, all right? So for the lows, we're going to have something like this. So this is the first low here. And this is the second low here. Now you may be asking me, how about this low? It's not obstructed too. The question is it this low or this one that broke this particular one? This low created this high, but this is the low that broke the high. So you are looking at immediate lows that broke the high that you yourself, you carry your hand and you draw. Please understand it. The lows that you are looking for is the lows that broke the highs that you had drawn. If this is the high, then this will be the low. But if this is the high that you drew, then this will be the low. Do you get it? Good. Now, this falls under the category of the lows. The lows that broke the high that has been drawn. The low must not have it must not have any obstruction. The highs must have at least one obstruction. So this is the places you're expecting. This is where you want to buy from. It's not as easy as una dey see am like this. You can take a screenshot of this. So this is category 1 and this is category 2. Jolly, please take a screenshot. You can take a screenshot and send it on the general group. So this is category 1 and that's category 2. Don't worry, I'm going to go to the live chart so that you guys will understand, because there are some times that market is not going to be very, very clean like this. Okay, so now talking about the where, let me take you through Friday. Okay, let me take you through Friday. Do you understand this concept? Should we go ahead to the live chart, drop in 5? If we should go to the live chart, please drop 5. You want us to go ahead to the live chart, please drop in 5. All right. Jolly, have you taken a screenshot? Or Maxam, you can just take a screenshot and send it in the group. Okay, great. So because I want to delete everything. Sent. Okay, nice. Okay, makes sense. All right, so now let me delete everything. And let's go to the charts. So now, market is in an uptrend. Shift F, nice, good. See this, market is in an uptrend. We have a low, like I said. We have a high. You see what I was saying, that market does not move in a straight line. See it, we have low, see, look at this. All these forms just one move. So don't be distracted. We have a low here and it moved up. We have a high. We came down here, right? We have a low here. Follow me, guys. The market did its drama. I'm not going to draw all the drama. All right. We have a sorry. We have this high. We have the high. Okay. Then we have the low and we have the high. So, ooh. Let's take it again on this one. We have the lows, we have the highs, we have the low here. We have this one, we have this one, we have this one. Okay. Yeah, then we now have this one. So let's turn it to black and let's make it 4. So this is what we have. This is what happened on Friday. So now the question is, where will market come to? Remember I said there are 2 places the market is likely to come to. Place number 1 is the previous high. So guys, if you now see, look at this high. I told you that the high must only have one obstruction. Now, what is the obstruction? Look at it. This is a high. This is a high that has already been broken. But if you draw this guy, we have this obstruction 1, then we have this obstruction 2. That means this particular high is not valid to become a support. We take it out. Then that leaves us with this high. This high had already been taken and it was broken twice. We don't need it again. Good. That leaves us with only one place. So there is no high that is qualified in this whole setup. No highs. That leaves us with only one place. Okay, let me do something like this. Let me do this. Okay, so this guy actually went up and started coming down. Let me just leave it here. So now that leaves us with two places, the lows. Okay, the lows. So now, like I said, this was the low that broke this high, broke this one, and it also did what broke this one. So this is a single move. This is a single move, guys. It's a single move. It took out this guy. It's a single move. All right, great. So now this is the origin of that move, the immediate low. It must not be touched. Then this is another move. But guess what? This low did not break any high. That was why I was explaining on Friday that this low has less probability than this one, because this one broke. It just be like person we don't fight, we don't win, and person will be say now fresh blood, he never win before, he no get experience. It may actually take off from here, but according to the laws of market structure, this guy is a weak demand because it did not break this supply. One of the things that makes a zone strong is if it breaks the opposing zone. Shebi na wetin make una call somebody champion be that if you defeat an opponent. All right? If you defeat an opponent, so if this high breaks this high, sorry, if this low rather, sorry, breaks this high, that makes this low very strong. So let's proceed. This low did not break any high, but at the same time, it's still a low. Then this low broke this high, it's still valid. Do we understand? So now this gives us two places where we want to buy. Okay, that was where we now drew our, what do you call it? We now drew our zones here. And here. These are the two places. We have no highs, only lows. When market came here, all right, there was nothing for us to do. But when market came here, we had something to do. Okay? So now, this is where to buy. Now let's move over to the when to buy. Let me see. Can I just move to 5 minutes like that? Okay. It's gonna alter it, so let me just delete it. Delete all drawings. So now, let me see if I can have a clearer one for you guys to see. It's still not very clear. Let me put the So this one is better. So now let's go to 5 minutes, or let's go to 3 minutes. The entry was on 3 minutes, and let's see what happened. Okay, so now I start trading, and I encourage my team to also start trading by 8 o'clock in the morning. So you don't just sit, 5 a.m. you are waking up to look for one trade. No. Okay, 8 a.m. just like the time you're going to stand up to go to work. Okay, 8 a.m. So this is 8 a.m. Market has not touched the zone that time. Remember this low that did not break this high. Market has not touched it that time. So by the time market touched it, look at it. By the time market touched it, what we are looking for is an engulfing candle, a big candle that swallowed up the next big candle. Remember, you have two places, so don't put all your money in this place. Okay, so now when we got here, there was actually an engulfing candle here. Okay, there was an engulfing candle on 3 minutes, but not on 5 minutes. I was looking at it on 5 minutes. So if we had entered here, the reason why we would not have entered, or why I would not have entered, is very simple. This engulfing has a long wick and a short wick at the bottom. I will explain. There is a long wick at where? At the top, and a short wick at the bottom. It means that market went up here, but sellers pushed it down. And look at the big candles that are coming into the zone. They are big black candles. I'm not going to risk buying here. Even if we do, guys, let us assume that we did. We will not all be perfect. So what is going to be our stop loss here? Okay, our stop loss is going to be like 7 pips. Don't ask me how I got to know the stop loss. That's a matter for another day. 7 pips. Okay, then take profit 1 is always 1:1, 7 pips. All right, so now let's check if this is going to work. At least it's below this one. Look at our stop losses down here. It's below this particular week, so it's a good one, right? So let's check. The next few candles we were taking out. Okay, look at it. We're taking out. Where are we headed to? That's why I said we have two places that we are interested in. What? That we're interested in buying. Okay. Abdul Razak, can you mute yourself, please? So, the next place we're expecting to buy is the zone that we drew below. This zone that we drew below. All right. Remember, I told you it has the highest probability. It has the highest probability for us. So, we are watching. We're watching. We're watching. We're watching. Somebody may be thinking, so, sir, is this not a break and it retest? Why don't we sell down? Now, are we in an uptrend or we are in a downtrend? If we are in an uptrend, we are only looking for what? A buy. So I'm not concerned with selling. That's why I said it's 100% buy for me and 100% sell on a downtrend. It's in a range that I'm going to look for either buy or sell. Time is not going to permit us to look at that. If we'll be explaining in details like this, then you guys have to be coming in the mornings, every mornings 8 to 9, because we don't just take trades there. All right, so now watch me, guys. Bam, market has entered into the zone. Look at it over here. Market has done what? Has entered into the zone. See it? Market has entered into the zone. So let us see what market is going to do. You see another sell candle. We are looking for buy. So when are we going to buy? Bam. This is when to buy. Do you notice that this particular candle, do you notice that this particular candle has small wick on top and small wick below? Did you notice that? That tells you that there is no much selling inside this wick. But the other one, there is plenty sellers there. Okay, now let's continue. Let's see whether we are going to have a good risk to reward here. So this is also 7 pips. Okay, we enter at the close of the candle. It's also 7 pips. Take profit 1 is always what? 1:1. Then if you're looking at take profit 2, remember, this is the beginning. All right. Take profit 2, sometimes I do 1:3. But an ideal take profit 2 will be this place in case the market decides to come back. But let's leave that for now. Let's see how far the market went. So guys, are we ready? This was a live trade on Friday. Okay. So you see, market was dancing around, dancing around. You see, market was dancing around, and boom, we had already taken what? Profit. We had already taken profit in how many minutes? Let me even check it. Shift F. In how many minutes? In 51 minutes, we had already made our money. Okay, then let's continue. Let's see how far the market went. You see, now market got to where we wanted it to go, which is this point. Did market go further than that again? Remember, we are in an uptrend. We're expecting the movement to the upside to be longer than the movement to the downside. So if you see all this movement to the downside, we expect that it should be short. All right, see how far market has gone. 1:4. Ooh, see how far market went. 1:6.8, and before the market closed for that day. So this is where market closed, guys. Ladies and gentlemen, market is not going to go in a straight line. No, it will not. So even if you lost 1% here, you gained some reasonable amount here. If you find one of these trades in a week, is it not worth your time? Is it not worth your time? So like you saw on the group, I posted the before and we posted the after. Okay, so we started from where? From 30 minutes. So look at it. This was where market came to. Now let's take a look at sell opportunity. Let me look for something. Let's see something. Let's go to a sell opportunity. Okay, now guys, market is coming down. Obviously, no doubt. This is the first week of what? Of what do you call it? The first week of November. Okay, so now remember, we have places to sell just the way I did that of buy. So the first place, is going to be the previous lows that has only one obstruction. The previous lows that has only one obstruction. The second place is the immediate high that has no obstruction. Just invert that of the buy that I did for you. You will understand it better. So now, let's go. Market has been coming down. We have a high, a low, lower high, lower low, lower high here, lower low here, lower high here, lower low here, lower high here, then lower low here. So on this fateful day, let me take this out. This is what we have. Let's just use this. Good. This is what we have. Now, listen, the first place is the lows with one obstruction. This is the low, but Market did not pull down long enough. Market didn't go down long enough to make this a point of relevance. Had it been market went down long enough, like this one, for example, now, let me check, like this one, this would be a low that would deserve a relevance. Look at this one here. I drew it since. This was a low. And when market broke, it came back up there. So if market did not break long downward enough, it will deserve no relevance. Take it out. So what you will be looking for are the highs that has no obstruction. As the highs that has no obstruction. Okay? So now this is the high. This is another high here. Let me draw this. This was another high up here. Okay? And the two of them actually broke the structure. The two of them actually did what? Gave a break of structure. All right? Good. So, when market got here, what are we going to do? This is 7 o'clock. It's not our time. So we are exempted. Did you see that? Our time is 8 o'clock. That's our time. So whatever is happening here is not our problem. And since the high has been invalidated or has been hindered, it's no longer useful. In a downtrend, the high must not be hindered. Okay, so let's take it down. Now we go to what? We go to either 3 minutes or 5 minutes, and we check what was actually going on that fateful day. I hope that we are going to have I don't think we'll meet up. Network? Just a minute, guys. Okay, great. Okay. Yep. Let's see. Let's see. Let's see. Okay, so network is dancing around. It will soon come to our area of interest. Good. So now, this actually came up in 3 minutes properly. So what do we have? This is 8 o'clock. Okay, this is 8 o'clock. And when market came into this place, look at all this place. Market was just dancing around. Market was just dancing around. And while we were in the class, I told them, I said, market was going to do this. Market will take everybody out here. And without having what? A sell candle. On 3 minutes, but I can't find that now. I will not be able to find it because I'm not using, I'm on a free version right now. Okay. So, but on 3 minutes, maybe I should use MT5. No. You will see the engulfing candle that was formed. Let me check it. What day was that? November what? November 3rd. Let me see if I can find that. On 3 minutes. I'm coming. Let me see if I can find November 3rd on 3 minutes. Great. Okay, so let me share something with you guys. Good. You can see it. So now, when market came into the zone, what happened? There was an engulfing candle. Look at this. There was a big black candle. Look at all those people dancing around. Even this big black candle, I told them it's a trap. Until market entered into the zone and gave a serious move. So if we check what the stop loss is here, this is what 2.5. That's like 5 pips. Okay. So 5 pips, the entry was around 52.93. Okay, so let me share my other screen back. So now 52.93. Yep, and 5 pips. TP1 is always 1:1. So guys, in just few minutes, we hit TP1. How far did the market go? Market will definitely go to where the lows. Market will go to the lows and give us another break of structure. What did we finally have? 1:6. It's as simple as that. All right? It's as simple as that. There is nothing hidden. Nothing. Nothing hidden. Come to the class every morning. For you to join the class is just $10 a month. Just $10 every month. Some of you spend more than that $10 in a whole day. In just a day, some of you spend more than that. So you see, like, we follow the market. We follow the market every now and then. We follow the market on the days of sell, on the days of buy, on the days of sell, on the days of buy. All right. Look at this. There was a day this is a preferred sell zone for me. Okay. Sell 1 and sell 2. Market went to sell 2 instead of sell 1. Okay. So this was the high, this was the low that was truncated once. Market got there, it didn't sell, but market sold at the highs. So if you really want to understand this concept properly, all right, just make sure you join me. Send me a DM and we are going to get started. Tomorrow morning again, we're going to be up 8 a.m. to 9 a.m. Sometimes we don't even get to 9 a.m. because we may find our setup between 8:15, between 8:30, thereabouts. Okay, and if there's no setup, once I notice that there's not going to be a setup, then forget it. We'll just, close the show. But now, like this, what is the market expected to do? Okay, let me show you what we are looking at for tomorrow. For tomorrow, market has already been in an uptrend, and this was the last low that was used, right? And this is the thing. If market is going up, we're expecting this high to be broken. We're expecting this highs to be broken. Okay, we want these highs to be broken. If these highs are broken, good. But if not, let's just do some little analysis here. Okay, don't worry, even if you don't understand what I'm doing, don't worry. I'm just going to be telling us what to expect for tomorrow. Where's Monday? Monday. Then this is a Thursday. Okay, so now here's the thing. Let's pay attention. For those of us who are already in the class, you will understand what I'm doing. So let me take this out. So these are the two places we are looking at. All through last week, this was the highest point. And this was the lowest point. So we don't need the lowest point because market is still far from the lowest point. So this may mean a what? A double top for us. Just the way we had a double bottom here. It may also mean a double top for us. And double top is a sign of reversal. See, this market does this thing every now and then. Look at it. See, it will come down. Every now and then, go up. Every now and then. Market does not move without a double top or a double bottom. It does not. It does not. But like I always say, market will do the obvious things in the least obvious ways. So anything can happen in this zone on Monday or from this night. Between these two places, anything can happen. All right, but our view is from 8 o'clock. Let me look the time here. So it's from 8 o'clock. Market is going to open once it's 11 p.m. All right. When market opens once it's 11 p.m., whatever market does is not my business. Even if market comes into the zone before 8 o'clock, then that means this zone has become invalid. If market breaks this zone like this, if market breaks this zone before 8 o'clock, then I'll be looking forward to what? Buying, because this is the high that was taken out only once. This high will no longer be valid because it has been taken. Okay, yes, it will still be valid because it was taken out once also. So this high will be valid here, this high will be valid here. But before that time, let's just wait and see whatever the market is going to do. Okay, so we cannot say we are going to buy here at the lows. No, let's wait to see what market is going to do over the night. The only thing I know is that this is the highest place of the week and this is the lowest place of the week. This is the last high on Friday and this is the low of Friday. So let's just keep our fingers crossed. It may end up becoming a range. See it, guys. Remember what we say concerning range. There is no definite direction. No definite direction. Before market reverses, it will give a range. Yep. So that's it. Do we have any questions? Any questions before we close? So I will be wrapping it up here. This is going to be the outlook, okay, for tomorrow. We don't have I don't do weekly outlook again because market is daily. All right, market is daily. I can still do weekly outlook and monthly outlook, but we trade every day. Okay, so that's what I'll be looking out for. Do we have any questions? If there's no questions, let's call it a day or a night. Any questions? Drop in the chat box if we have any questions. So this is what we would be looking out for. So when we come tomorrow morning by 8 a.m. in the group, then we'll be able to know what exactly to do. There might be trade tomorrow and there might be no trade tomorrow. Okay, this is going to be the NFP week. So now let's check the news. Nothing tomorrow. Tuesday, 4 p.m. USD. Wednesday. Okay, sorry, Tuesday. Oh, that was Monday. There's nothing on Tuesday. Okay, Wednesday. Yep, we have non-farm payroll ADP. Yep, ISM. Okay. Then Thursday, unemployment claims as usual. Friday is going to be NFP. So both NFP and Canadian unemployment rate on Friday. This is NFP week. So guys, we have to be very, very careful. Okay. Bank of Japan, the governor of Bank of Japan will be speaking tomorrow. All right. So guys, that's it. If you have not subscribed to our YouTube channel, please do so. All right. It's just Baraka FX. In the absence of nothing, I'm going to be closing the class here. Thank you very much for showing up and see you at the Good Morning Trading Show.